Hello, everybody, and welcome to the Middle Class Investor. This is Seth Martin, and it is about 6 o'clock on Saturday, January 23rd. I've got the S&P 500 up here on the screen for you, and you can see we had an up week. Not only did we have an up week, I don't know why that's coming up on the screen. Let me see if I can get rid of that. Not only did we have an up week, but we had a pretty rapid sell-off down into this low here below 1825, and the bulls drove the market all the way back up to here to finish the week higher. This is a pretty strong reversal candle, and I suspect it's going to result in some higher prices over the next week or two, potentially. I've got a couple of channels drawn up here because I wanted to talk a little bit about where we might see it kind of stop and roll back over. And if you notice up here back here on the last time down, where we had this last time down, you can see I drew a channel here over these prices in this area. Just make it a little bit more pronounced. You can see this channel here that kind of encapsulates these price bars right here. You can see we broke down through that very hard, and we bounced back up. We bounced back up to the lower side of this channel, which is pretty typical on a first move down. Now, notice that the market went down. It went up, touched the channel, came down, and almost made a lower low. This shape here is very normal, where you get a sell-off. Sorry about that. Where's my Z? There it is. So you get let me draw it a little bit over this way so that, gosh, I keep hitting the wrong button. Sorry. Let me draw it over here this way so it'll show up a little bit better. You get a sell-off, you get a bounce, and then normally you get a little bit slightly lower low like this. And although we didn't get that in this first move down. So that kind of made it difficult to see whether or not we were going to get a new high or not. That's why there was a little bit of uncertainty around whether or not we might get a new high. So what I've done is I've drawn the channel again to kind of capture this price action. And then you can see here we had this move down. And so what are we expecting? We're expecting a move up. Probably could be higher than this high, but it might not be. But let's just draw it to the bottom of the channel. And the thing keeps jumping. I don't know not sure how to make it quit doing that, but let me draw it over this way a little bit. That way it won't do it, even though that's not how long it's probably going to take. And then we should look for this to make a slightly lower low. That's one possibility. The other possibility is that we get maybe this is as high as this goes next week, and then we get a little pullback, and then a run up into this area that might actually go a little higher than this area, and then a dramatic sell-off. So bottom line is we've got some bullish action here, whether it pulls back first and then goes up, or it continues to go up further. It's hard to say. Either way, what's going to be important is how it takes out this low. So if we accelerate through this low pretty rapidly, we got some major stuff happening in the market, and you're going to want to be off those tracks. Now, you could anticipate that by kind of getting out somewhere in here, but that's everybody. Everybody has to make their own decision for those types of things themselves. I can't tell you to do that. Nobody else can tell you to do that. You're dealing with your money, and so it's your decision. I'm just here to tell you, or to help you kind of see the the fact is, at this point, we've got a high back here. We came down and we made a low, and then we rallied back up and made a lower high, and now we've made a lower low. So now we've got the makings of a downtrend. And so the rule is, once you have a trend, whether it's up or down, it tends to continue. So whatever kind of bounce we get here, whether it's a little meager bounce at the bottom of this channel and then the sell-off, or whether it's a stronger bounce into a little bit higher price action, it doesn't really matter. What matters is that the trend has changed, and we're looking for some weakness and then a rollover. Now, what we could do is we could talk a little bit about, how does that weakness, how does it kind of show up? And I think that's useful information to know. So you can see that the market really accelerated right through this area. And what you'll see when the market starts to begin to top out of its current trend, you'll see full candles like this, excuse me, and then you'll get some really short ones like this that'll have a tail on either end. And sometimes they can even be really, really short. Like you get one like this, and it maybe even has a tail that goes way up like this. When you start getting stuff like this is telling you that we're running out of room on this trend. Now, we might not get this on a weekly basis. So if you're going to be looking for this type of price action, you'll probably want to be looking for it on a daily chart. So let me pull up a daily chart, zoom in, and you can see at this point we don't really have that. But notice like right in here, you've kind of got that look. Whoops. Right in here you have these little dojis. Right up in here where it's kind of topping out, you have these little dojis. So this is kind of what happens when the trend runs out of steam. So I would look for bars that look like these right here to tell you that you're starting to run out of room in the current trend. And you need to do that on a daily chart like this chart instead of looking at a weekly chart. Now, for the purpose of this, I like to look at weekly charts. But what I want to do is I want to go to the Wilshire. I want to show you a more typical looking price pattern. And so from right here to here. So from right here, whoops. Let me zoom in a little bit. Okay. So what I'm looking at specifically is this area right in here. You can kind of see it comes down, it comes up, it comes down, made that return move and then up. So that's what we're looking for, but over here now. So we've had this down, up, down. We're looking for this little bounce here and then a slightly lower low. That's what I'm expecting to see in this current market action. And the Wilshire right here just looks almost textbook. So try to envision this pattern completing right through here. So you've got this move down here. Let me just draw it on here. You got this move down here. You got this move up. Got this other move. Whoops. Got this other move down. And so what remains is, a move up like this and then a slightly lower low like that. That's what we're looking for to happen. I'd say the probability is probably 70% this and probably 30% that you get something like this and then down. So, but look for both because there's no way to really know which one is going to happen. right, let's look at the 10-year yield. The 10-year yield this week was actually it did the same thing the market did. It reversed and started to come up. So it kind of retested these areas down here around our blue box, and this area right in here kind of retested this zone right here, and then rallied back up. And the bulls, or really the bond, what really happened here is the bond market sold off, and so yields started to go up. And it just remains to be seen whether or not this is going to continue to go up, in a big way, or if it's going to chop around a little bit more here. But I'm relatively certain that the lows from back here are the lows, and that we won't be revisiting these lows down here anytime soon. These values here are like 1.7% yield or something along those lines. Yeah, 1.6. And so it's unlikely that we'll be revisiting this, but we could come back to this area down here. You could see the market come back and retest these lows as part of this return move. So keep an eye out for that, but I'm pretty sure this low is still a good low. Okay, let me go back to volatility, because we didn't talk about volatility, but the S&P volatility pulled in this week. Obviously, with a big bullish move, you're going to have volatility pull in, and that's what we got. So there's not much to say about that, other than it just remains to be seen whether or not volatility is going to pull back into these areas that we've seen here recently, or if it kind of bounces from here and goes higher. Clearly, if the market has more upside, then you could see volatility pull back a little further. But I'm not expecting that, but that doesn't mean that couldn't happen. Let's go over and look at the dollar. The dollar's been continuing. It's just kind of been scratching out a move higher. It hasn't really been, the accelerated part of that move was back here in this area between in 2014 and the summer of 2014 through the end of the year. You had this really accelerated move, and then it chopped, and now we're starting to continue to move higher again. And we've got this box drawn on here. And so I'm expecting the dollar to continue to move up into this area here before we get a pullback. So I don't know, even 105, anywhere around in here, we're likely going to see the dollar continue to move higher. So that means the euro is going to continue to move lower. So depending on how you're looking at that, if you have interest in the euro market, you can look at the dollar, you can look at the euro, whichever one's, easier for you to keep up with. Crude oil had an interesting week this week. We had a really big bounce in crude oil. And let me get some of this stuff off the screen, because this is kind of hard to look at. Let me make this smaller. Okay, there. That's a little bit better. So crude oil, you can see here, the bears sold it off to, below $27. And we've had this box drawn on here for a while. I talked about it going below 20. I can't remember if I said 29 or 28 a few videos back. And but then we should be seeing some big rally here. Now, the big rally, again, going back to that pattern that I was showing you just a second ago, the question is it going to come to say here first and then make a slightly lower low, or will it just pull back a little bit here and then, rally pretty hard? And there's no way to know, but certainly crude oil is trying to put in some sort of bottom here. And anywhere in this area, if you want to be a buyer of crude, certainly this is a great this is a great area to be a buyer. Now, the difference between the two markets, the difference between the S&P 500 and the crude market, is crude has been going down for 2 years almost. So whereas the S&P 500 has only been going down for 6 weeks, or not even 6 weeks. Well, technically, the high was made back in May of last year, but we chopped around sideways for a long time. So you can't look at the markets the same way. The crude market and the S&P 500 market, even though here at the bottom, crude and the S&P look very similar, you got to keep in mind that crude oil has been going down for a long time. So I'm a little less. I'm skeptical about a fake out here on crude where you actually pull to a lower value. I don't think that's as likely at this point because, again, crude has been going down for so long. So I think the more likely outcome here is you get maybe a little pullback and then off to the races with crude up into that $60 area that we've been talking about. So that's crude oil. What else is interesting in the market right now? Let me look at NinjaTrader, and we can look at the FTSE. So this is a weekly chart on the FTSE. You can see it looks a lot like the Dow and the S&P 500. Although this pattern looks like it's complete, it could be that the FTSE is actually leading the American markets, and so maybe the FTSE goes a little higher here. Maybe it makes it all the way to here even, and then starts to pull back. The markets don't go straight up or straight down, but it is important to look at these swings. Notice if I use the decision point tool here and I put a decision point on, notice that that the market went right to that point and stopped going down. The same can be said about the way up. So, if you want to look at the FTSE, if the market's done going down, and it could very well be, if you look at this candle these series of candles right here, there was something happening in volume. So a lot of times that's a good indicator that the market is through going down momentarily. And what you would want to do is you'd want to probably take long positions back up into this area. And now it may not get all the way up into the area. It may come up, up into this, maybe fill this gap here and then roll over. Can everybody see that gap? See this gap right here between this bar and this bar. So you could get the FTSE kind of meander its way up here, fill that gap, and then boom, roll over. So that's the way. It's a good way to look at these markets, is look from swing to swing and trade them from swing to swing. The DAX is probably very similar, although the DAX may have further to go down. If you look, if we put a decision point here, you can put a decision point here. So anyway, you would look for the DAX maybe to come all the way into this decision point before bouncing. Let's see what the ES looks like on. Let's pull up a weekly chart on the ES. See if there's any trade signals. Maybe look at a daily as well. I've got a lot of junk on there. So see, we have a TS4 here, which I realize doesn't mean anything to this group, but the market's finding a trade signal here, right at a decision point area. Now, again, it could be that it goes up to a higher high, and maybe it does. You can see that if I put the analysis on this bar here, it's going to take this up to a higher high, up to this decision point area. So that's certainly possible. I don't know. My gut feeling is it's not likely, especially since you have all this China stuff going on. And the China stuff going on is really, it's really kind of interesting because, it's like I kind of get the sense that people on TV are blaming China or something like that. But really what's happening is the Chinese are, because we trade with them, in order to normalize the trade deficit, what they used to do to normalize the trade deficit is they would take their excess dollars and buy U.S. Treasuries. Well, they've openly have decided not to do any more of that. So now what they have to do is they have to basically devalue their currency because of the trade deficit that we have. We basically buy more from them than they buy from us, so there's this deficit. And, basically, without them doing this, they would be importing inflation from us, and that's not to their advantage. So they don't want to do that. So they're doing some stuff with their currency to make it fall. Now, yes, it's falling, but relatively speaking, it's much higher than it was, even 5 years ago. So I think the media, what you hear on TV, it's kind of United States good, China bad, which is the way they like to put everything. They like to basically simplify everything into they're bad, we're good, and they need to stop what they're doing, and we can continue to do what we're doing. And I think that's a little bit simplistic, and the Chinese are just doing what they have to do to maintain the balance of trade and the balance of money flows between the United States and China. So I don't know. To me, I think it's a big bunch of nothing. But it certainly is having an impact on our markets, and I suspect we'll continue to have some impacts going forward. And what's interesting is what it's kind of a chicken or the egg thing. Does the market roll over and it causes stress, and then China reacts or the United States reacts, or is it the other way around? Is it they're doing something and that's causing the market to have stress? The reality is, for us, for middle-class investors, we don't really care what the cause is because we get paid on price. If your 401k is higher price, or then you get to take out more money in the future. If it's lower price, then you get to take out less money in the future. The reason it's higher or the reason it's lower is really not all that important. At least that's the way I look at it. I don't know if everybody agrees with me on that. Certainly, if you disagree, feel free to comment. That's really about it this week. I just go back to the beginning of the video. The first part of the video is the most important. I'm looking for a pattern that looks like this, except to complete here on this rundown. And that should take us on the S&P 500, should take us into an area just below this channel, which means we've got some more upside probably in the market, probably into this 1960 area, I'm guessing. And then we should see some more selling to the downside. So look for that to happen. Certainly next week we'll know which one was the case. Did we get a pullback first and then a run up? Or did we just continue to meander our way up here into this area and actually come down and make a lower low? So next week we'll be able to determine which one actually happened. And that's always fun to check to see, if you're right or wrong or whatever. All right, everybody, thanks for coming in this week. And be careful, be vigilant in the market, take care of your money. Don't let these people on TV convince you that everything's fine, because everything is not fine, and we get paid on price ultimately, so protect your capital. That's number one priority. Protect capital. That's even more important than getting worried about growing your capital. Okay? Thanks, everybody. Take care. Bye-bye.